Hello and welcome to our international activation of the 2023 Startup Global Program focused on the UK market. I'm Phillipa, Managing Director here at Startup Canada. To begin, I would like to acknowledge the land that I'm on today is located on the unceded territories of the Algonquin Anishinaabe Nation. We also acknowledge with respect the diverse histories and cultures of all Indigenous peoples. I encourage you to take a moment to acknowledge the traditional territory that you are residing on today. Today's session is being recorded, and the recording will be shared afterwards and posted on our YouTube channel and Facebook page. In the meantime, we invite all attendees to introduce themselves and connect with each other in the Zoom chat. Feel free to share your name, your organization, where you're joining from. And one little note, just for housekeeping, make sure you're sending your messages to everyone in the Zoom. Otherwise, Zoom will default to just sending your information to the host and the panelists. So remember to toggle that, everyone in the room. A little bit about Startup Canada before we dive in today. We are a national nonprofit that is the gateway to Canada's entrepreneurial ecosystem. We are here to connect entrepreneurs with the support, community, and tools they need to build a successful business in Canada. And since launching in 2012, I'm super proud to say that we have grown to support over 130,000 entrepreneurs annually. Startup Global is one of our flagship programs that connects a pan-Canadian cohort of entrepreneurs wanting to build global businesses with a network of partners dedicated to their success. This free program recognizes the importance of exporting to the Canadian economy, celebrates those making waves in the global marketplace, and empowers early-stage founders to take their ventures to the international stage. Before we begin, I'd like to take a quick moment to thank our co-presenting partners for 2023, Export Development Canada, the Trade Commissioner Service, UPS, and Desjardins, as well as our ecosystem support partners, which we'll share a list of in the chat below. Today's conversation, however, will focus on exploring the UK market. It will provide some practical advice and actionable takeaways to attendees looking to export here. These experts, we've got a great panel lined up today, will take us through everything that you need to know when it comes to accounting, legal requirements, recruitment, as well as securing investment in the UK, plus many more goodies throughout the course of the session. I'll be moderating today's conversation, and I've got some questions prepared for our speakers. However, we will have some time towards the end to discuss any audience Q&A. So there's a little Q&A feature down at the bottom of your Zoom screen. Feel free to add your questions in there, and we'll try to get our best responses sorted to every question that comes through. And if not, those we might need to respond to after the session today. And we'll follow up. Without further ado, I'm honored to introduce our first speaker for today, Chloe Griffin. She is a business development manager for Eastern Canada with London & Partners. Chloe, I'm going to turn it over to you.
Thank you so much. Just wanted to share my screen there. Can everyone see it? It's good?
Looks great.
Okay, thank you. So thanks so much, Crystal, and to the Startup Canada team for having me, as well to everyone in attendance. As Crystal mentioned, my name is Chloe Griffin, and just to briefly introduce myself, I work on behalf of London and Partners, which is the official business growth and destination agency for London in the UK. We're guided by the Mayor's priorities and are mandated to generate economic development for the city. One of the main ways in which we do this is by attracting and supporting international companies to expand to and set up in London. I'm based in Canada for that purpose and work with Canadian companies within a variety of sectors to support their growth journeys across the pond. We are a not-for-profit social enterprise, partly funded by the London taxpayers, as well as through partnerships like those that we have with Oury Clark and commercial ventures that we run. Just to note, all of our services are free and confidential for all the businesses that we work with. So I just wanted to kick off today by providing a very high-level overview of the opportunities in the UK market and London more specifically for businesses looking to trade with and or invest in the UK. And I really just wanted to say that every day I speak with Canadian businesses and entrepreneurs who see the UK as an ideal launchpad into Europe and beyond, very much due to the similarities in language and culture, which can make it a relatively smoother process to navigate than some other markets. And most businesses that I speak with look to the US and UK as their top two priority markets for international growth, and are especially attracted to the UK market for its strategic global positioning, talent, customers, and investment. So just to give a little bit of an overview on the trade and investment relationship between Canada and the UK. So the UK, with a population of 67 million people and a GDP of 3.1 trillion, is a major international trading power. It is the second largest economy in Europe after that of Germany, and led the G7 in GDP growth last year. The UK is Canada's second largest services trading partner in the world after the US, and it is also Canada's third largest destination for merchandise exports worldwide. The UK on the investment side is Canada's second largest destination for Canadian direct investment abroad, and is also Canada's most important science, technology, and innovation partner in Europe, as well as the second most important partner for that in the world after the US. And as mentioned, obviously, it is a top location in Europe for many North American firms to base regional headquarters that cover Europe, the Middle East, and Africa. So just to delve a little bit more into the opportunities in the UK is a large, diverse, and very sophisticated economy, home to some of the most digitally advanced consumers and top global firms. It is a global hub for firms across a range of sectors, including aerospace, agri-food, creative, education, energy, clean tech, financial services, life sciences, and ICT. What there is a specifically high demand for is products and services that lower costs and improve efficiencies, specifically within the financial services sector, healthcare, mobility, and infrastructure. And of course, with ambitious low carbon targets, it is also a market very much in high demand of renewable energies. So just to move on and delve a little bit deeper into some of the fundamental strengths and opportunities in London, as it really is kind of the financial and business center for the UK. London basically has a number of different offerings that make it an ideal place to invest in, to expand your business, etc. First off, connectivity. In London, you have access to everything you need in one city. It has the Fin of New York, the tech of Silicon Valley, and the policymakers of Washington, all within a 15-minute journey on public transport. It boasts 6 international airports, and Heathrow handles more international passengers than any other airport in Europe. Its business day overlaps with all financial centers in the world. So you can begin your day speaking in Asia and end it speaking in North America. English is also the universal language for business, science, medicine, and all things tech. So in terms of customers, which is always very critical, it has a high density of diverse and digitally savvy customers with more than 270 nationalities and 300 languages. The UK as a whole, shoppers spend a huge amount online annually, totaling roughly about 106 billion last year, and has nearly 60 million e-commerce users, making it the most lucrative e-commerce market in Europe. Now, in terms of talent, which is always critically important when trying to grow your business, London is the leading tech ecosystem in Europe and home to roughly 270,000 engineers, which is the highest number of any European city. It's also a global center for learning with 4 universities in the global top 40. Over 57% of the total developer community in the UK is based in the greater London area. In terms of investment, so as we all know, VC investment is a driving force behind innovation in the tech sector, and London remained Europe's leading hub for tech investment, attracting roughly £19.8 billion in 2022. The city also experienced specifically a surge in investment in purpose-driven tech, which are companies that have a positive impact on our environment and society as a whole. So in terms of lifestyle and culture, which is always very important for us living our lives, it offers world-class arts, leisure, entertainment, and food. And also a fun fact, it's known as the first national park city or green city because it has about 33% green space. And last off, ecosystem. I mean, London is home to over 180 incubators and accelerators, making it the largest tech ecosystem in Europe. It has a number of industry bodies and support networks that help serve various sectors like Innovate Finance, UK, and Tech Nation. And it was also named the best city in the world to be a young entrepreneur, ahead of New York and San Francisco, which I always find is kind of a nice stat. So that's a very quick high-level view, and I just wanted to say to any of the companies on the line that if you're looking at kind of thinking about going global, thinking about your international strategy, and you might be looking at the UK or London, I'd be happy to have a chat to discuss how London and Partners can help you. We offer a number of services to really help you build that business case, identify the market potential, and of course, we very much rely on our network of partners like Oury Clark, who help set your company up for success right from the beginning. So if you're interested, please reach out and we'd be happy to support you in that journey. Thank you.
Wonderful. Thank you so much, Chloe. And just for everyone, we have dropped contact information for all of our panels today into the chat. So highly encourage everyone connect with the folks today. Great knowledge and great resources available. So without further ado, we are also joined by a number of other wonderful faces here from the Oury Clark team as well. So we are joined by Emma and Amy, who are both chartered accountants and chartered tax advisors. Jess, who's an employment lawyer, and Phillipa, who is a corporate lawyer, all of whom are partners at Oury Clark. And so as of now, maybe I'm going to hand things over to Phillipa to take it from here.
Lovely. Thanks, Crystal. Hopefully everybody can hear me all right. Scream if you can't, and hopefully I'll hear that. So we've done who's here today. Hopefully you can all see the screen. Who are we? Well, we are Oury Clark. We are a firm of, this is the big reveal, which actually comes up later, but anyway, we're a firm of accountants, which I think the equivalent is CPA in Canada, and lawyers, which is quite unusual in the UK. So you've got all your professional services in one place. We have 2 offices and 140 staff. So we have one office in London itself and another one just outside London. If any of you have seen The Office, we're the TV show The Office, we're in Slough, which is just outside London. We've been going for 87 years so far, straight talking financial and legal advice since 1935. And we've helped over 3,000 overseas businesses set up in the UK. So in the last 10 years. So what we really do as a firm, one of our real strengths is bringing businesses from other jurisdictions like Canada, like the US, like all over, into the UK. And we work with all sorts of businesses in Canada. I think we work for at least 2 of the nationwide pensions providers, for example, and some other examples of some of the firms and companies in Canada we work for is on this slide. So big, small, and everything in between, from startups all the way through SMEs to listed entities in Canada. And we are lawyers and accountants. I don't know why that slide comes up so late, because that is what we are. So chartered tax advisors, auditors, recruiters, insolvency practitioners, and financial advisors, all on the accounting, the CPA side. And then on the legal side, we do all sorts of corporate and commercial advice, from setup and starting your business in the UK, through commercial contracts, through employing people in the UK, and getting property in the UK if you want to do that as well. So that is a quick overview of us, and I'm going to hand over to Emma to talk about whether you're trading with or in the UK. Emma.
Thanks, Pip. Hi, everyone. I thought before I launch into the good juicy stuff, I'd just have a quick run through of what we're going to talk about today, so you can pick when you go and make your coffee if any of the sections are not applicable to you. So we're going to talk about the first thing is going to be the concepts of trading in and with the UK. We're going to talk about the concept of permanent establishment, how to form a company in the UK, and how to open a UK bank account. We're going to cover some of the UK compliance from an accounts and tax point of view, going to delve a little bit into recruitment, immigration, and the visas that are available. We then kind of go back a bit to some of the tax reliefs that might be available to you and you might want to take advantage of. And then finally, raising money in the UK. So to start with, we're going to look at the concept of trading in and trading with, and you'll see that depending on kind of which you're doing, the requirements from a UK point of view are different. So you've kind of developed your product in Canada, you're ready to kind of go and expand across the seas. There's really nothing stopping you selling directly to UK customers. This is the concept of trading with the UK. There are some things you will need to consider when trading with the UK. Most of these are the bits that the accountants don't really like talking about because they're very complicated. VAT is the big one. It's really the only one you've got to really consider. The UK has a zero thresholds for distance selling of goods. So if you are selling goods into the UK, then you're likely to need a VAT registration. Similarly, if you're providing services into the UK, so these are services that are kind of delivered from Canada directly into the UK, then if you are supplying a business that's VAT registered in the UK, actually you can hand over the VAT regulatory things to that customer. They'll deal with the UK VAT. However, if you're supplying electronically supplied services like a subscription service or services delivered over the internet, then the place of supply is where the customer is, and that then brings you back within the scope of UK VAT. So if you're going to be trading with the UK, what I would say is you really need to find yourself a good VAT advisor. Speak to us. We have a VAT department who can just run through with you whether you do need to register for VAT in the UK. It's quite important to do this early on, because if you get that wrong, you can be building up some liabilities. So definitely get that checked out early on. Unlike a lot of the European countries, you do not need a fiscal representative in the UK. This is someone locally who can deal with the VAT authorities for you. It tends to be quite costly when you need one. You do not need one in the UK. You can handle your VAT yourself. You can use a firm such as us to do it for you. We are not a fiscal representative. It's different. If you are going to be selling goods into the UK, you do also need to think about customs. Those goods are crossing the border. Customs duties will be payable. Normally that's handled by your 3PL, so you won't have to do much with it. There is a preferential regime in existence between the UK and Canada for any goods with Canadian origin. So really the barrier is pretty small. Just need to get a good VAT advisor and understand whether your 3PL is going to deal with your customs. So moving on to trading in the UK, this starts to happen if you send people to the UK or you have offices in the UK to handle your UK customers. Effectively, this is if you're making an extension of your business physically on the ground in the UK, then you'll be trading in the UK rather than trading with the UK. If you begin trading in the UK, you need to then look to see if your activity is creating a permanent establishment. A permanent establishment is the kind of geeky name we give to effectively creating a taxable presence in the UK by virtue of your activities that are occurring in the UK. This could be by having a salesperson in the UK, having senior management in the UK, carrying out your main trade in the UK, or having a fixed place of business in the UK. It's effectively HMRC saying that you're generating profit from your activity in the UK and they want tax on their slice of profit effectively. Once you have created a PE, it's normal to ring fence that in some sort of entity. This is when people start setting up limited companies. There are other entity types you can set up. For example, you could have a branch of your Canadian company. So this is where speaking to someone for some structuring advice comes in, because there's pros and cons of both of those. Some of the activities that you might be undertaking in the UK actually won't create a PE. Things like storing and maintaining goods in the UK, you don't have to worry about that. An office carrying out preparatory or auxiliary work, such as advertising, the purchasing of goods or information gathering, none of that will create a permanent establishment. But you must be aware that if you are an advertising company and you are advertising in the UK, that wouldn't be classed as preparatory or auxiliary. You are simply carrying out part of your business in the UK, and therefore you are likely to have created a UK permanent establishment. So I think now we're going to have a poll. That how worried are you that you might have created a permanent establishment in the UK? I'm going to give you a few minutes to answer that. How are we doing on answers, Crystal?
About 50% through. Most are leaning towards the answer of no. A few towards, I literally have no idea what you're talking about.
Oh dear.
That's where our
Not a good
concentration
start, is it?
seems to reside. So, so I would say so far heavily weighted more on the no side for this one.
Okay. Do we end the poll on that? Oh yeah, so we've got 82% no, 18 literally I have no idea what you are talking about. So for those people that have answered no, I'd say we've caught you at a good time. If you're thinking of doing this in the future, then obviously, as I mentioned, speak to someone before, just to make sure you structure it correctly. For the people that say I've got literally no idea what you're talking about, I won't be offended. I'm not going to take up tax lecturing, it appears, and I will pass you over to someone who can speak more sense than me. Over to you, Amy.
Thanks, Emma. Well, I'm not sure about that, but I will try. So I'm going to talk now quickly about company formation. So if you have either created a permanent establishment and want to keep your UK activities separate from your Canadian activities, or there may be a commercial need for a UK company. Quite often there are certain industries whereby a UK company is actually going to be required in order to operate in the UK. If you've got to set up the company, then I suppose the good news is it's really, really easy. It literally can take up to 24 hours. You do not need to have a UK resident director, so your directorship can mirror your Canadian board. There are no minimum share capital requirements, so you can incorporate an entity with £1 of share capital. You do need a registered office in the UK. However, it's really common that you use your UK accountant or lawyer's address for that purpose. This is where your official mail is sent. So even businesses with big offices in the UK tend to use accountants and lawyers for this, so that no important post is missed. So once you have your company, the next step, or if you aren't thinking about it, it would be to set up your UK bank account. The reason that I say that is because setting up a UK bank account can actually notoriously be quite difficult with the traditional high street banks. Unfortunately, they are under quite strict and extensive anti-money laundering regulations, which are quite tedious for both the bank and for businesses. So unfortunately, that can result in opening up a UK bank account taking anywhere up to 6 months. So the good news is, however, that the fintech revolution has happened. So we do have some excellent alternatives to the traditional bank accounts, such as Airwallex, Wise, CashPlus, Revolut, all those names hopefully you've heard of. These accounts can be set up with relative ease and definitely a lot quicker than a traditional UK high street bank account. There are some instances where a traditional bank account may be actually required, something that we'll come on to in other parts of our talk. However, quite often, just to get started and to get you up and running, the fintech option would be your best bet. Once you've got your company, you've got your bank account, there are some compliance requirements that you should be aware of. Unfortunately, this is the boring bit, so potentially the time to have your coffee break. So once you've got your company, you've got to think about your compliance. The first thing I think about would be your accounts. So you've got, in the UK, all UK companies have to file statutory accounts on public record, so they are available for everyone to see. These accounts would be subject to a statutory audit if the group reaches the UK audit thresholds. Just something to bear in mind, our UK audit thresholds unfortunately are based on group consolidated numbers. So potentially you can end up with a smaller company in the UK requiring an audit if it's part of a larger group. Those audit thresholds are approximately 10 million GBP of turnover or sales, 5 million of gross assets and 50 employees. So if you breach two of those, just be mindful you may need a statutory audit in the UK. You also have to submit a UK tax return, which is based on the accounts that you have filed on public record. There is also an annual confirmation statement that has to be filed, which is basically an annual confirmation that the information held by the Registrar of Companies, Companies House, is up to date and accurate. There are also a few further tax considerations that you'd need to think about. So I've mentioned briefly the corporation tax return. In the UK, our current UK corporation tax rate ranges between 19% and 25%, depending on your profit levels in the UK. So that tax is paid annually with the filing of the corporation tax return. The second tax to think about would be VAT, which Emma did touch on earlier. This is currently at a rate of 20%. This is our sort of sales tax equivalent. And depending on your structure in the UK, you may be required to charge back on your service, on your sales, but you can also recover VAT that is charged to you on your costs. So sometimes you can be in a repayment position. This is normally a quarterly filing. The final tax to think about would be whether you are employing anybody in the UK. If you are, then you will need to register for PAYE, which is our payroll taxes, and process a payroll in the UK, normally on a monthly basis. The current cost to employers is 13.8%, and there is a legal requirement for businesses to operate a company pension scheme for UK employees, and therefore, if you do fall under that, you do have a further contribution of 3% if your employees opt into this scheme. This is actually one of the areas where you do need a bank account that will provide you with a UK direct debit facility. So just be careful here. Not all of the fintech alternatives provide a direct debit facility. There are some that do. So pick sensibly if you are looking at employing people in the UK. And then over to you, Jeff, I think now.
Cool, thank you. So I'm just going to speak to you a little bit about recruitment and employment law in the UK. So Chloe has already given us the hard sell on London, which is great. So the UK hosts 4 of the world's top 10 universities. The USA has 4, the other 2 are in Singapore and Switzerland. So we think that's pretty impressive for an objectively tiny place. The UK is 41 times smaller than the USA. So in terms of getting started in the UK with people on the ground, you've kind of got 2 options there. So you can either transfer your existing Canadian staff out to the UK, which makes sense, they know your business, or the other option is that you recruit within the UK. So those people are likely to have the local knowledge of the market, things like that. Like everywhere, there is a small amount of skills shortage in the UK, but what we are seeing is that a lot of people who are in slightly declining industries are willing to adapt their skill set towards growing industries, so such as tech. As we've said, the options really are send somebody out or recruit in the UK, what we see a lot of clients doing is sending somebody from the Canadian entity initially to help things get running, and then start to build up the business within the UK with staff there. That keeps obviously your Canadian side going while the UK company continues to grow. In terms of things to attract the best candidates, what we're seeing is that a lot of employees are placing a lot of emphasis on healthy work-life balance. So mental health and well-being are considered more and more important than ever. And employees really like to see that companies are adopting these into their day-to-day running. We can't give any kind of talk these days without mentioning COVID-19. Since that and the move towards hybrid working, that is definitely the preferred method for a lot of individuals. Companies offering a mix of sort of office and home working are increasingly attractive to candidates. And then in terms of benefits, obviously any additional benefits that can be offered to employees are really helpful. However, a lot of people in the UK recognise that startups and things like that are not always going to be able to give them the best private healthcare, the best pension, the best death in service, that sort of thing. So all we say to clients is keep it under review, see what you can do at various points. People like to grow with a company. So you've got your employees. So now just to kind of talk through their rights. 2 is our magic number really in the UK. So somebody needs to work for you for 2 years before they get most of their employment rights. So that includes unfair dismissal. What this basically means is that as long as you don't do anything too horrific, you can pretty much get rid of somebody within the first 2 years without needing to give them any kind of reason. There's some caveats around obviously things like discrimination, whistleblowing, certain other rights that people have from day dot. If you do go down that route, unless there's gross misconduct, you need to give them notice. All employees are entitled to this. So generally it's a week per year of employment up to 12 years. And then after 2 years, you can still get rid of people. But you need a fair reason and a fair process. I know people don't like to talk about that when we're going into these things, but it's important to know how easy it is to kind of get out of that. In terms of other rights that your employees would have, so as Amy's mentioned, there's a 3% pension contribution. Employees in the UK have a right to 28 days paid annual leave, so that's for full-time employees. It works out to be 5.6 weeks. If they get ill, they're entitled to statutory sick pay, which is about £110 a week. And employees are also entitled to statutory maternity pay, adoption pay, shared parental leave, paternity pay, and you can actually claim the majority of these costs back from the government where they're the statutory rates. In terms of what you actually need to do, so you need to set up a payroll, as Amy's mentioned, to collect tax and NI for those employees. Before they start working for you, you need to conduct what we call a right to work check. So that's a legal requirement to prevent illegal working. If you are found to be employing somebody who doesn't have the right to work in the UK, then you can face some pretty hefty fines. You also need to set up employer's liability insurance. So as soon as you have a UK employee, you need to have this insurance. It's really not very expensive to have it, and we have great contacts with brokers that can assist on that. But if you don't have it, the penalties for not having it are very high. And then finally, you need to issue your employee a contract. So that will set out the sort of legal relationship between you and the employee, set out all their duties, all your obligations and everything like that. And then I think we've got another poll here at 21. Thank you. So would you consider hiring locally or sending somebody over? Let's give you a minute or two to respond. Crystal, how are we looking on?
Okay, well, we've got a solid sort of I think, mix between all three, but we've got, well, it's changing a little bit, but hire locally in the UK. We don't understand British humor, and mixture of the two are also top, and a couple of contenders for send someone from our Canadian entity.
Brilliant. Okay,
Spreading the
perfect.
Canadian love.
Brilliant. Thank you. So we move on from that one. So again, Chloe, thank you again for explaining all about London. So as we say, we think it's pretty great over here. No one's coming here for the weather, but we've got good mix of green spaces, good mix of Michelin stars. We're still seen as a launch pad for Europe, despite Brexit. They do still like us. London is obviously a great place to be, but there's plenty of other hubs in the UK which are really good for talent. So there's more qualified software developers and AI experts in London than any European city. So on to the next slide. I've told you how great it is. How do we get you over here? I'm not going to go through every single possible visa route. There are too many devils, too many details. Luckily, there are lots of routes available for Canadian individuals. So there's lots of ancestry routes available. They're usually the easiest. So if you've got a grandparent or a parent, then that was born in the UK, then that's great. We also have the Youth Mobility Scheme. So that's being extended from 2024. So anyone 18 to 35 can apply for this, and you can get a visa for up to 3 years. There's also a variety of sponsorship routes, so that's connected to the company. The company has to get the sponsor license and then sponsor the individual. But there's also routes such as graduate visas. So I spoke about our universities, so you can get visas that way. There's also global talent, high potential individual, and innovative founder routes. Apologies, and they're all again connected to the business. And then just my final one. So we've mentioned about temporarily sending staff from Canada over to help set you up on the ground in the UK. There's an option of secondment. So this basically allows you to temporarily loan an employee from your Canadian entity to the UK to help get things started. And that comes with some major tax advantages, which I'm going to pass over to Emma because she is much better at explaining them than I am.
Let's hope so. Thanks, Jess. So yeah, secondment's a really great kind of tool to have when you're just sending someone over to the UK to start up, because it gets you out of some UK taxes and out of a lot of kind of hassle admin wise in the UK. So if it's just kind of 1 or 2 people coming over initially, they could definitely worth looking at. What I would say kind of from a tax point of view is that the visa requirements and the tax rules in the UK can often pull in pretty opposite directions. We have an immigration department internally, and we always do visas as a combined effort with the tax and the visa to make sure that we're kind of, you are getting the best from both sides. As I said, they do normally pull in some different directions. But if you have someone coming to the UK from Canada, as we spoke about before, you can either hire them locally and they'll be subject to national insurance and the workplace pension, or you can second them. And if someone is seconded, it means they're not ordinarily resident in the UK. This is a temporary arrangement. They do not have to pay national insurance. They have a holiday of up to 5 years. And they are exempt from the workplace pension. So, I mean, if you had to have a workplace pension for other hires anyway, it's not a huge deal adding someone else. But if you haven't got any local hires and you're just seconding someone initially to avoid having to set up a pension scheme in the UK, is quite a bonus. If the intention is for that staff member to be in the UK for less than 2 years, we have some temporary workplace rules in the UK which are quite tax advantageous, and you can piggyback those rules effectively. If you want to Google it, it's weirdly called detached duty relief when we're talking in cross-border situations, but it is just the temporary workplace rules in the UK. And this means that if someone is attending a temporary workplace, and the definition of that is a workplace that's intending to exist for less than 2 years, then the costs associated with them attending that workplace can be paid free of UK tax. So you can pay their rent on their behalf, pay their commuting costs on their behalf, and that would not constitute a taxable benefit in the UK. So you can structure it quite nicely and save some tax at a time when you're trying to kind of put the pennies into exploring the UK market. That's that one, Pippa.
Okay, so I don't think we could do a talk on setting up in the UK without mentioning R&D. So our scheme is based on the Canadian scheme. So if you are carrying out any R&D in Canada and taking advantage of the Canadian R&D scheme, then you will already know quite a lot about the UK scheme. I could actually do an entire presentation on R&D, so I'll just mention a few headline points. So presently our rates of cashback range from 15 to 27%. The UK company does not need to own the IP to benefit from the relief. So the UK company just needs to benefit from the R&D work. So there are some clever ways of structuring your operations to ensure you maximise the R&D relief that you can. The work being done by the UK does not actually need to be R&D by itself, as long as it's part of a group project that meets the definition of R&D, you can be eligible for claiming some cash back in the UK. So again, it's helpful if you consider your R&D structure on a global level, and then we can ensure you're maximising the relief. The UK R&D scheme does require the presence of UK employees in order to maximise the cashback. Otherwise, the relief is restricted, and then partial cash credits can be claimed. So just something to bear in mind. You are likely going to need people on the ground in order to get the full relief in the UK. So yeah, just a few points to mention on R&D.
Who is doing brand protection? Is that you, Emma?
You? No.
Or is it?
Should we skip over that one, maybe?
Yeah, well, we can just talk about it a little bit, which is to say that, like any other jurisdiction in the world, you need to protect your intellectual property if you're coming to the UK. And the easiest way to do that is to get a trademark. A trademark in the UK, again, I would imagine it's very similar in Canada, gives you, a priority right to use your brand and to use that mark in trading. And it gives you the ability to, if somebody starts to use a brand very similar to yours or exactly like yours, it gives you the ability to effectively just stop them from doing that very, very quickly. Getting a trademark in the UK is relatively simple and relatively easy to do. The first step is always to just search the register and make sure there isn't a trademark that is too similar to yours already, which means you wouldn't be able to register your mark. But normally you can, you tend to be all right in that regard. And if there is a mark that's similar, you can probably do some kind of deal with the person holding the mark, as long as it's not as long as you're not in competition with that person. And then to get a trademark normally costs £2,000 to £3,000 in the UK, and will protect you in the UK when trading under that name. So we would absolutely recommend that, I think, if you're coming to the UK. Oh, we've got another poll. So who's doing the poll, Crystal? Thank you.
Okay, we've got a good mix so far. Some
Okay,
startups,
let's see.
some growing. Just give it another second here. I'd say it's about pretty even across the board.
Okay. Oh, yes, it is. It is. Brilliant. Thank you. So what I'm about to talk about is probably going to apply to all of you, which is quite useful, or may apply to all of you. So I'm going to talk about the UK being a great place to raise money, which frankly, I think it is. We have a very active market, particularly in London, but all over the UK, in terms of both angel investment, so high net worth individuals investing in companies, and venture capital. So London in particular, as you're probably aware, is a big centre of venture capital investment, and a lot of it happens over here. The reasons really why it's so active in the UK, particularly with angel investors, so individuals investing in companies, is because we have basically some schemes in the UK that are very tax beneficial to people if you want to invest in a UK company. So these are called the Enterprise Investment Scheme, the Seed Enterprise Investment Scheme, and VCT. And they're all quite similar. EIS is the main one. So that's the biggest kind of tax efficient scheme that we have in the UK. And what it does is, if you're a trading company in the UK, or if you're a permanent establishment, which Emma has talked about already in the UK, and you're not controlled by another company, so that might well be a lot of you, then you can raise money in the UK via this scheme. And what it does is it allows individuals in the UK, so high net worth individuals, to invest in the company up to £1 million a year for each individual. The company can raise up to £5 million a year, and I think it's 12 million over the lifetime of that company, and even more if you're what's called a knowledge intensive company, which, you know, we can look and see if you are, if that's something that would interest you. You can raise 10 million a year and 20 million over the life of the company if you're knowledge intensive. And what happens is an individual invests cash in your business for shares, either in the UK entity, or if you've got a Canadian entity, with a PE in the Canadian entity. And in return, they get, if they're a UK taxpayer, they get 30% of what they've invested off their income tax bill in the year that they invest or the year before. So that means if they're a high rate taxpayer in the UK for income tax, they immediately get 30% of what they've invested in you back off their tax bill, which is quite popular, as you might imagine. It's not really why they do it, though, because the real reason that these angel investors invest via EIS is because, provided they take advantage of that income tax break and they hold their shares in the company for at least 3 years, when they come to sell the shares, they're capital gains exempt. So there is capital gains tax in the UK on the gain you make if you buy some shares and sell them in the future. If they've held those shares for 3 years and it's an EIS qualifying investment, they don't pay any tax on that gain they make. So all these angel investors are kind of hoping that you will be a unicorn and they will put in £100,000 and they will get out £1 million or, you know, £2 million, and they won't pay a penny of tax on it. And as you can imagine, that is pretty popular in the UK. So EIS, the Enterprise Investment Scheme, is the main scheme where you can take investment of up to £1 million from any individual in a year. The other scheme, or the earlier stage scheme, for those of you with seed companies, is SEIS, the Seed Enterprise Investment Scheme. And that's a very similar scheme. So it has very similar rules. There are, I should say, a lot of rules around these schemes. The reason for that is because they're such brilliant tax breaks that you have to jump through a lot of hoops to get them. But the Seed Enterprise Investment Scheme, within the first 2 years after you've sold your first product, you can raise up to £350,000, £200,000 from any individual, and that individual will get 50% of what they've invested back off their income tax, and also get the capital gains tax exemption when they sell. So again, that's pretty popular as well. VCTs are very similar, only what happens is a venture capital company sets up a venture capital trust, and the investors invest in that venture capital trust. They can invest up to £200,000 a year, and they get 30% of that off their income tax in a similar way to EIS. And they are capital gains exempt if they hold the shares in that VCT for 5 years. The great thing about that is, obviously, the whole point of the VCT is then to go out. So the venture capital trust itself will then go out and invest in startups itself. So it's a kind of self-perpetuating regime in the UK. And it has worked very, very well for very, very many companies in the UK over the last few years, and it has really loosened up the investment sort of environment in the UK. As I said, you either need to be a company that's raising this money in the UK from UK individuals, or a permanent establishment. And sometimes a permanent establishment makes more sense because one of the rules is you can't be a controlled company. So if you're a Canadian company and you set up a subsidiary in the UK, that subsidiary wouldn't be able to raise money because it's controlled by the Canadian entity. So permanent establishment might well be the way to go. There are other ways of raising money in the UK. Crowdfunding is, well, you've probably heard of it. It's been very, very popular in the UK. It's great for B2C businesses. So really, it's almost more of an advertising thing than a fundraising thing, because it gives you actual as well as metaphorical investors in your business. So your customers become your investors. The problems with it, however, are you normally have to go through a crowdfunding platform in the UK, and that platform will charge you a percentage of what you're trying to raise to introduce you to their crowdfunding investors on that platform. That's normally about 6 or 7% of the raise. So I would say, frankly, it's cheap advertising potentially, but it's probably expensive fundraising, because you can probably fundraise without having to pay that 6 or 7% to the crowdfunding platform. The other thing that the crowdfunding platforms don't tell you until you kind of get onto it is that they will normally expect you to have found 50% or more of the investors before they will let you go live on their platform. So it's not a case of you rocking up to a crowdfunding platform and saying, great, I need to raise £500,000, £500,000, put me on your platform. They will say, okay, you need to find £250,000 worth of that first, and have people committed to give you that money before we will allow you to go live. So it doesn't stop you having to do the painful work of finding investors. So it's not quite as easy as you might imagine. And certainly in the UK over the last couple of years, there was a time, probably 2 or 3 years ago, when I had a lot of clients who were raising £1-2 million via crowdfunding. That has reduced quite a lot in the last couple of years. So, it's kind of the EIS and SEIS regime in the UK has brought on a load of individual investors who are keen to invest in things without a crowdfunding site, I would say. I've put debt down here. Yes, you can raise money through debt. It's quite difficult, particularly if you're going to raise from banks, institutional investors. They will want to see a trading history. So if you're a very early startup, or if you've only been going for a couple of years, they might not be interested in lending you money. They may well charge a fairly significant interest rate, and they are risk averse. So they will quite often ask for security. So they will want you to have assets that they can take a charge over, so that if it all goes wrong, they can take your assets away. Now, I'm sure most of you will say that as startups and early stage businesses, particularly if you're in tech, for example, you don't have many physical assets that you can give the bank a charge over. And so then the bank starts to look at other ways that they can get security. And one of the main ways is a personal guarantee. So a guarantee from you as the founder of the business, which is not necessarily something you want to give them. And finally, Amy's already talked about R&D. And as she says, it's very similar to Canada. We also have something in the UK called the Innovate Grants system. And it's an entity called the UKRI, which stands for UK Research and Innovation, which is a non-departmental public body that is sponsored by the Department for Science, Innovation and Technology in the UK, so one of our government departments. And you can find this online. There's a website with loads and loads of different grants that people are offering for innovation, for developing new products and new processes. And it's well worth having a look at, because there's particularly med tech at the moment, I think. In particular, there are a lot of grants out there for those kind of businesses. So that I think is it for our presentation.
I was just going to jump in quickly on this one.
Yeah, go on.
Thanks, Pippa. I think we mentioned earlier that we do actually travel in market kind of every 6 months or so. Unfortunately, you've just missed Amy's trip, her winter trip, but Jess and I are out in a few weeks' time. We are going to Montreal on the 27th of November and Toronto the 28th of November to the 1st of December. If you want to come and meet us when we're on our trip, then get in contact. We'd love to talk to you more about your expansion to the UK. Just for you and other people that you may think would benefit, we offer all potential new clients a free introductory call. We generally cover much of the same information as we've done today, but we can answer some kind of specific questions you might have on your business or ideas around structuring, for example. There's a load of information on our website, and actually the slides below this one have QR codes to quick guides on our website. I think you'll get a copy of the slides, but if not, just Google Oury Clark quick guides and you'll have a whole library covering all kind of aspects of things you might need to know about for your expansion to the UK and many other interesting topics. So I think we're now moving on to the Q&A session. Sorry if we don't get to answer your questions. I know we're running quite short of time now, but thank you very much.
Thanks, Emma. I'm just going to handle the question portion. So I think, Jess, I'm just going to run through the questions. Actually, we've got some questions that have been submitted already. But I'm just going to run through some of the ones that are from the presentation. So Karen has asked, an EOR is a great alternative, or not asked, said, is a great alternative to a permanent establishment. Jess, I think you want to take this one, do you?
Yeah, Emma, do you want to go first on the permanent establishment point? And then
sorry, so it was a question. It's a great alternative to a permanent establishment. So an employer of record is a little bit different to a permanent establishment. I mean, we kind of think of them as PEOs in the UK. They might handle your HR and payroll processing responsibilities, but they're not going to remove the risk of creating a permanent establishment. I say risk because you've seen you might want to create a permanent establishment, but sometimes you may not want to. And running, if you have a salesperson in the UK through a PEO or employer of record, that doesn't mitigate your risk of permanent establishment. So you would still have to do that. In our opinion, in the UK, I don't think they really offer kind of much more than an accountant or a lawyer could. We can run payrolls very easily, and obviously we have an employment team that can handle kind of employment contracts. There are some jurisdictions where they're really helpful, but in the UK, I think our opinion is they're not really very helpful. But Jess, feel free to add anything.
I agree. I mean, unfortunately, they don't protect you from employment tribunal related issues. They also leave you with potential issues for your IP protection. So your contract is in, with a traditional employee-employer relationship, your contract is directly with the employee, that you can kind of, if anything goes wrong, you've got that contract, you can rely on it, you can enforce against that person. If you're adding a third party in there, you're starting to dilute your IP rights, your trade secrets, everything like that. And as you expand in the UK, you're going to want to hopefully bring those staff in and hold on to them as your own, and they're some of your most valuable assets. And we have this fun little bit of legislation from the EU, which is called 2P, which deals with basically transferring your staff if you want to transfer them internally, you have to comply with this legislation. And what it basically means is you can't just change somebody's contracts. So you need to think, if you're using an employer of record or a PO, from day one, you need to make sure that the contract with the employer of record or the PO and the employee that you're using has everything that you're going to want in it at a later stage from an operational commercial perspective, as that is basically going to be what you're stuck with, unless we can kind of get around that 2P legislation, which sometimes we can try our best, but then you're going to be stuck with that, unfortunately, and not really able to change it. So yeah, generally in the UK they don't particularly make any sense, unfortunately.
Thanks, Jess. So then Connie has asked, this presentation recommends to open a business in the US. I think she means UK rather than the US, because we don't necessarily recommend you open a business in the US. The UK. How will this connect to our Canadian operations? Would it be completely a completely separate entity and pay taxes separately and no reporting back to Canada. Who wants to? I think the first thing to say is it depends whether you're setting up a subsidiary, i.e. a company owned by your company in Canada, a UK company that's a subsidiary, or a permanent establishment. But do one of the accountants, Amy, do you want to take that one?
Yeah, so I mean that's exactly right. So if you decide to set up a UK subsidiary, that is a separate legal entity. You would only be reporting on the UK entity from both an accounting, tax perspective. There may be intercompany transactions, and on the whole, I don't think I've ever seen a parent-subsidiary relationship where there aren't. So there may be some intergroup transactions between the two entities, but on the whole, yes, everything in relation to a UK subsidiary is very separate to Canada. If you decide to set up a branch for whatever reason, so the permanent establishment, if you choose to register that permanent establishment without setting up a UK subsidiary, then that is not a separate legal entity. That is just a registration of the Canadian company operating in the UK. In that instance, you would be required to file publicly the Canadian company account. From a tax perspective, you would only need to report the UK activities of the branch in with the UK tax authorities. So you are still keeping the UK activities somewhat separate from a tax perspective, but just bear in mind it's not quite the same separate legal distinction between the Canadian company and the UK activities if you go down the branch route. If anyone else has anything else to add there, but hopefully that helps.
No, that sounded quite clear to me. We've got one from Joyce, which I'm probably just going to, what if you have European citizenship? What are the laws now to do business there? I don't think we can possibly begin to answer what the laws are in Europe at the moment to do business. We're talking specifically about the UK, but I guess the one thing I would say is having European citizenship now, following the dreaded B word that we don't like to talk about, Brexit, doesn't entitle you to necessarily do business in the UK. I don't know whether anybody wants to add to that.
Yeah. I mean, I suppose I would say, you know, if you have any follow-up questions, if you want to chat about your specific circumstances, because sometimes it's quite difficult to get the question phrased correctly in the chat, so we might be misinterpreting your question. So if you want to have a chat with any of us after, you know, you have our contact details, we're very happy to talk through your specific circumstances.
And then we've got one from Carrie here, which says, what if I export cloth made in another country, but I live in Canada and also want to open a store in the UK? So like a kind of trifecta of things.
All sorts going on there.
Yeah.
Yeah. I mean, if you're talking about it from a kind of customs point of view, then it has to be which country has those goods come from. So if they're coming directly from another country into the UK, you've got to look at the customs in relation to those two countries. Just the fact that you're Canadian and you're kind of in control of that flow of goods doesn't mean that there's going to be Canadian customs there. So I'd say that that's kind of a distinction.
Yeah, with goods, you very much follow the actual physical good around to work out what you need to be doing from a tax perspective and customs perspective.
Brilliant. Crystal, how much time have we got? Because we've got some few other questions that have been...
We are over time.
Okay.
Unfortunately, but it's been a great discussion, and this is meaty, right? I know we really are just skimming the top of, you know, how to do all and any of this, but I think as a primer, you've shared some really, really amazing information and some really great tips. I know Miriam, my colleague, dropped all the URLs for those QR codes also in the chat for all of the participants to check out as well. But maybe we'll need to plan for a part 2 next year. The UK
is a lot to cover.
It's
a lot to cover.
Yeah,
but if anybody wants to get in contact, we can answer the question. You know, we can delve into things more.
Absolutely. Perfect. Well, I'm going to wrap things up. I just have a few short remarks and then we'll let everyone get on with their day. But thank you to the Oury Clark team and Chloe, London and Partners. Much appreciate your time and all your expertise today across the board. It's been very, very insightful. We do have a quick feedback poll just on today's session that Miriam's going to launch momentarily here. Appreciate if everyone could take a second to fill that in. Helps us in our future planning for our 2024 program as well. We do have another event coming up on November 9th as part of our sort of global program that will be focused on exporting, sort of assessing your export readiness. So check that out on Thursday afternoon. So for some of those trade agreement sort of questions, things like that, we'll also go into more detail in Thursday's session as well. And Zainab will do our best to respond to your question following today's session. Unfortunately, we won't be able to address right now. Anyway, thank you all for your time and thank you for tuning in, and we hope to see you again soon. Take care.